I mean, in terms of not being a company, Bitcoin doesn't have those risks. But then, you have China making what you called a terrible mistake, in a $1 trillion mistake in terms of, outlawing or banning Bitcoin and Bitcoin mining. I think for me, I've always looked at it as like they want their digital yuan to be the future reserve currency of the world. So they're trying to get rid of the competition essentially. But then, you look at the risk for Bitcoin. Do you ever see the United States government, not necessarily banning it, but trying to clamp down and as a risk factor? Or do you think it's getting too big where, I mean, once you have MicroStrategy's investing and Tesla investing, they can't really clamp down on it at that point?
I think the thing to keep in mind about the crypto ecosystem is there are digital properties, there is digital currency, and there are digital applications. Digital property is, I just own one block in cyber Manhattan called a Bitcoin, and there are 21 million other. I just own one. What do? I just own it. What does it do? It just sits there. It's property. That's taxed as property by the IRS. That is property rights. Any country that gives you property rights will let you own it. As far as I can tell, China hasn't banned the ownership of Bitcoin yet. You can still own it. So as property, there isn't that much regulatory risk, certainly not in the Western world. I think in Western Europe, the United States, if you can own $1 million of gold, and if you can own $1 million of a spider, and if you can own $1 million of land, you can own $1 million of Bitcoin. You should start worrying when we flip to a communist regime or a socialist regime, when they steal your building and they take your art and they take your house and they take your stocks and they take your cash and they take your gold. Yeah, they're probably going to try to take your Bitcoin too. But of all those things, Bitcoin will be the hardest thing for them to take. They will take all the other stuff first. Everything else you own in this world will be taken from you before they take your Bitcoin. Now, the other aspect, digital currency, yeah, nobody wants you to threaten their currency. So, you're not going to be able to transfer $1 million of Bitcoin tax-free in private. That's not going to happen, right? Any more than you could transfer $1 million of stock in Apple tax-free privately. They're not going to let you do that either. You can't sell your house for $1 million, book a $900,000 capital gain and not pay it. So those kind of property laws will apply to Bitcoin. I think that the Chinese wanted this digital currency, but they got confused between their thinking that Bitcoin was the currency, and it's not going to protect their currency at all. It's more like I banned electricity and the internet to support my currency. Bitcoin is technology for digital property rights on 8 billion handheld devices. So if you outlawed the ability to move music on a mobile device or move videos on a mobile device, right? It wouldn't help your currency. It would undermine your economy. So that's kind of what they did. They undermined the value and screwed with the value of their mobile networks without knowing it, because most people don't think that hard about it. The third area of cryptos is digital apps like DeFi, if you're trading stock tokens, if you're trading an Apple stock token on a Saturday afternoon, maybe the SEC will care. If you're actually competing with the commodities exchange or the futures exchange or trading derivatives or you're creating unregistered securities, then you're going to have to pass the Howey test. There's going to be a question as to, is this an unregistered security or is this property? And there's a legal distinction. If it's property, then anybody can own it and it's not subject to securities laws. And if it is a security, then, a politician can't own it without violating House ethics rules. And so there will be clarity in that area as people sort out what's a token that's property versus a token that's security. And if your token is currency, like Tether. I mean, if you have a stable coin, if your token is literally a dollar or a euro, and then you're not applying KYC AML regs and you're moving $50 billion of a money market in cyberspace that's not subject to KYC and you don't have a money transfer license, and you're operating in the US, you're going to catch regulatory heat, I think. So you just have to distinguish in your head, what are people using these things for? Are they using it to move money, dollars? Are they using it to store monetary value and property? Or are they using it to trade option derivatives on Saturday afternoon? And if you're using it to store intellectual property rights, let's say you put your music on an NFT and you give it away. Well, interesting. What if you put the Eagles music on an NFT? Well, you're going to get a letter from the Eagles lawyer, because the Eagles lawyer is going to be concerned about you distributing their copyrighted material. So the use case of the crypto is going to invite the regulatory scrutiny.
Like, I've always viewed Bitcoin and my holdings in Bitcoin as being, my concern with what the Federal Reserve is doing with printing money. The debt in the US is rising. All the central banks in the world are printing money. And it's always been kind of my thought process as a digital gold for me to kind of store and keep my value as the dollar gets diluted. Are you along those lines, or you're more like a currency, like people should be going into Starbucks and buying things with Bitcoin?
I don't really think it's a currency. I think it's a property, or it's an asset. A digital gold is a good metaphor. You have $1 million, you want to hold it for 100 years. Your choice is buy $1 million worth of gold, $1 million worth of land, $1 million worth of art, $1 million worth of stock, $1 million worth of bonds, or $1 million worth of dollars. And if you just check through those, or $1 million worth of baseball cards or collectibles, if you check through all of those things, the conclusion is, what you'd like to have is something as good as gold, without the defects of gold, but as good as FANG stocks, but without the fragility of FANG stocks. So how do I fix gold? I fix gold by making it impossible to mine any more gold, and making it instant and free to audit the gold, and then make it instant and free to move the gold from this side of the earth to that side of the earth, and make it programmable. So that makes a better gold. And how do I fix a FANG stock? You could buy a portfolio of Apple, Amazon, Facebook, Google. I mean, that's what I held a bunch of that for a decade. Pretty good trade, went up by a factor of 10 to 20.
Yeah.
What's the problem? They might get unionized at Amazon. There might be an antitrust, movement against Google or against Facebook or against Apple. There might be an employment tax. There might be an income tax. There might be a tariff trade rule. They might ship the wrong iPhone. Maybe the Google Android phone beats the iPhone. Maybe the CEO goes bonkers. Maybe something else happens. The bottom line is the product, the board, the CEO, the company, the nexus, the office, the employees, and the earnings are all risks of a company, even a monopoly. If it's a monopoly, that's the risk, right? I mean, a politician might decide to tax or regulate a monopoly. If it's not a monopoly, then your competitor is the risk. So what if I could just keep the power of big tech, but get rid of the CEO, the product, the company, and the quarterly releases? And if you could do that, you would have Bitcoin. So Bitcoin is like digital gold without the defects and the material problem of gold. And it's also big tech without the risk of big tech. And so think of it as big tech gold. It's property that has the least likelihood of being impaired. If you're an information theorist, or if you're an engineer, the first thing they teach you is the more moving parts, the more parts to break. That's Murphy's Law. So what if I just wanted to create a machine that had the least number of moving parts? Okay, I fire the CEO, I fire the board. There are no quarterly releases. There are no products. There are no services. There are no employees. There's no offices. There is no country. It's just software running on 10,000 nodes scattered to the four winds. And what does it do? It just is. It doesn't do anything. On one hand, it's the simplest possible product. I just keep track of the ownership of 21 million virtual things. Simplest thing imaginable, a million times simpler than Facebook, Google, Apple, Amazon. On the other hand, it is like plankton. You are a beautiful peacock, or you are an eagle if you're a company. You can fly. or you're a whale or a dolphin and you can do flips. Not Bitcoin. Bitcoin is plankton. But but my money's on the plankton, right? After the nuclear apocalypse, the plankton will probably still be here because it's so simple. What is there to break? Right? That's the idea of Bitcoin. I'm investing money in the simplest, most robust, most anti-fragile, durable thing I can think of, with the idea that there aren't moving parts to break and there's no person to screw it up.